So now we're going to move on to a talk, Key Tax Considerations for an NFT Project, by Ben Lee, Manisha Sandhu, and Steve Collins.
Morning, everyone. Just to check, this is a tax presentation. It's 9:30 on a Thursday, and I just want to make sure you are in the right place, because I won't be offended if you get up and leave now.
It's going to be full of either HMRC stooges or people who've got some serious tax issues at the moment.
I was going to say, thank you so much for joining us, and what a better way to wake up than talking about taxes.
That's what I do every morning. It's ideal.
I know, they should have just put this at the end. Everyone would have had a really nice sleep. I'm just kidding. We're going to make this as interesting as possible. We got a nice little introduction, so thank you. And welcome to NFT London. This is so exciting. And really appreciate you taking your morning. So we'll just do some brief introductions and kind of talk about what we do so you have an idea of that. So, Ben.
Hi, everyone. I'm Ben Lee. I'm a partner at a firm called PKF Francis Clark. First time NFT London speaker, long time NFT lover. And I help a lot of businesses try and achieve what they want to do within the parameters, the known parameters of taxation in the UK.
Amazing.
Okay,
Steve?
my name's Steve Collins. I've got a small accountancy practice and marketing and advisory service in the crypto world. I was quite late into the crypto space. It was only a couple of years ago that I started looking into this. Up to that point, I was like, oh, it's this fad or this thing that's going to kind of burn out. And obviously during lockdown, everyone had a bit more spare time on their hands. I was, okay, I've seriously missed out on where this is going, misunderstood where this is, and then since then, for the last couple of years, been full degen mode into crypto, and first time speaking here as well.
Bet you never thought you'd hear that. Your accountant calling themselves a degen. Hi, I'm Manisha Sandhu. I have an accounting practice in Canada, and I also do fractional CFO, CO works for NFT crypto companies and startups to help kind of guide them in the right direction. And I will be probably speaking more from the Canadian, US standpoint. I would imagine you two will be speaking more from the UK standpoint. Is that safe to say?
That's what I understand. Yeah.
Okay, amazing. I will put a general advisory because I wouldn't be a good accountant without doing that. This is not tax advice. We are not your accountants.
Can we all say this in unison?
This is for informational purposes only. Okay,
and
amazing.
possibly even fun.
Yeah.
Possibly.
So actually, let's start off with, like, what are some big things you guys have been seeing, or if there's like a major point that you want to kind of like start off with that you saw, or something to keep in mind?
So one of the things that we certainly see in tax in general, but within this space, is a lot of people who get a great idea and they go away and do that great idea because that's what they're good at. Then further down the line, they'll come to someone like myself and say, hey, we did this. And then my spider senses start tingling because it's very hard to unwrap what somebody has done, potentially. It's much easier to try and go, hey, look, we've got this idea. Let's get some advice to begin with. And I would say that. I'm an accountant. But actually, what can we do, and what are the things that we need to consider, which is what we're talking about here. And one of those things, certainly in the UK, is obviously how things might be structured or set up. Now, in the UK, let's say I just went off and I did my own NFT project. Any money that I might make from selling those NFTs is going to be taxable as income tax. So that's going to be subject to whatever marginal rate of tax that might be for me, which could be 20%, 40%, 45%. If I'd structured that within a corporate, a limited company, that's going to be subject to corporation tax, which currently is 19%, but potentially, well, it is going up to 25% next year, depending on where your taxable profits sit. And this might sound like a very basic thing, but it's a really important thing to start from the get-go, especially where I might be doing something with a friend, should I have one, and he'd bring all the ideas to the table, and I just bring the sad accounting knowledge, but we go, oh, hey, let's go and do this. This is a really good idea. And we might just think, oh, that's great, off we go, but actually, you know, in the eyes of everyone else, and for certainly tax purposes, we're probably in partnership with each other, which means we've got to do a partnership return, which means we have to report our partnership profits, and it's a whole different way of looking at things. Certainly, you know, where we might be thinking about then remunerating ourselves from the project. Sorry, I'm conscious I'm talking a lot, and I will let the other people have a turn in a second. You know, hang on a minute, oh, we've got all this money, maybe we start doing it from a company, but hey, let's just transfer 20 odd ETH out to my account because I want to go and play with it. Well, hang on a minute, guys. You've got a company. Now we need to start thinking about how does that form part of your remuneration? You know, you've made effectively a distribution in specie of assets from a company, so we need to look at things like profitability, is that lawful, and various other things. And I'm going to stop.
No, that's amazing. So we're going to dive into maybe some of those things as we go on. So that's great. Thanks, Ben. Steve, any like main level takeaways?
Yeah, I think it's the same issue we see. People think about these things too late. And the starting point that I always have, whether it's from people starting up an NFT project or trading NFTs themselves or being in this space in general, is actually, although tax isn't the key driver, it's not thought about till it's too late. And so presume you're going to lose everything, presume you're going to make $1 million. What would you do now which would change the way you operate based on both of those extremes? Because in this space, both of those extremes are equally likely. Chances are you'll be somewhere in the middle over that. But if you lose it all, not structuring your situation now to be able to relieve those and get tax benefits and breaks from those is just as irresponsible as not structuring it correctly. So if you make millions of pounds, you're paying the correct levels of tax in the correct jurisdictions. And that key setup and having those conversations at the start with the accounting and the legal team, for me, are the big mistakes that people make in terms of jumping into these projects too quickly.
Yeah, and I guess for me, high level, it's kind of in tandem with what you both were saying is I find that people come after the fact and they're not thinking about what they're doing. And then it's a cleanup act rather than a proactive. You know, I'd rather you play offense than play defense is what I'm trying to say. So why defend what you're doing when you can just set it up correctly from the get-go? So actually, if I may, so one thing that people don't realize is most creators that I talk to start their NFT projects as individuals. They're not incorporated, they're not in a partnership, or what they believe. They don't believe that they're in a partnership. And they start these projects and they think, it's amazing. And then they make some money. And then all of a sudden they're like, oh, I got these other things, legal, tax, accounting. What do I do? But by then, I'm so sorry to say, you have to spend so much more money to fix your situation than had you come to me, Ben, or Steve just a little earlier. Because now we're in a whole different situation. And not only that, maybe you also have to pay your tax authorities a little bit more because of it. So the key is, if you're gonna start a business, if you're starting an NFT project, I really want you to think about what is your intention. Are you doing this with someone else? How would you want to share that? Are you doing this alone? Do you want legal protection through a corporation, for example? Or are you okay doing this and holding everything on your own? So maybe, Ben, you want to get into that?
I would agree, and going back to sort of the motivation there, so a lot of people undertake these projects to make money. Now, you know, what we're dealing with here is an asset class that is obviously prone to volatility, and one of the issues that I certainly come across quite a lot is liquidity. You know, someone, as you were saying, will go off, they'll do a project, they'll make lots of money, fantastic. Then they'll come to the likes of us and go, hey, we've made this money. Fab, but I haven't thought about perhaps professional fees. I probably haven't thought about taxes and the taxes that apply. And hang on a minute, the market's just crashed and everything that I've just been holding in Ethereum is worth half of what it was holding before now. That's going to hit your bottom line a hell of a lot harder than it did if provisions were in place to actually, you know, convert some of that into something more stable, like stablecoin or fiat at the time, because, you know, up until a point we can pay taxes in crypto, which may be way off in the future if ever, we're always going to have to make that in fiat. So it's all about making those provisions and those understandings as part of the financial outlook as well of those projects. So engaging with, you know, advisors to make sure that you know all of those costs and you have the provisions in place to actually make them.
Most definitely. Steve?
Yeah, and that structuring is just as important at company level as it is at personal level. And obviously the reason why we're all here and the reason we champion DLT and blockchain technology is because of that decentralized nature. And the amount of people that come to me and say, oh, well, you know, the HMRC, whoever, doesn't know where it all is. Well, of course they do. It's all there. It's all transparent. And also, you know, I don't need to pay tax because I haven't taken it out yet and there's no guidance. Well, of course there is. And there's this kind of naivety at that level in terms of how they set it up. And because of the disruptive nature of crypto, they seem to believe that allows a level of extra unaccountability. Oh, it's okay, I've set up a company in BVI or Cayman Islands, so, and you sort of sit down, you look at it and you say, well, hang on, you've got a BVI company with you as the sole beneficiary and you're moving money from your UK company and it's clearly a sham. oh yeah, but it's fine. They won't know, and you just see it all the time, and they get caught out, and then it's clearly for fraudulent reasons. Clients that come in, oh, I've moved my money via a security token, therefore they don't know where it's gone. Brilliant. So actually, if I was an investigator, I'm starting at the security token and working my way back, and that's going to be where it is. So that structuring, don't get me wrong, there's clear structuring from a legal point of view where offshore or international companies are useful around regulatory compliance, security, particularly personal security in the crypto space. But people running where they've just seen a YouTube video on it, and that's the best way to do it, are really where they tie themselves up the wrong way as well.
Was it my YouTube video?
It was.
I was also going to say, I think it's really important. How many of you here are NFT projects or companies by a show of hands? Okay, quite a few. So one thing I would really implore you to do is go back after this session and sit down and kind of come up, if you haven't thought about this already, think about a strategy, right? That especially if you're just dealing in crypto, every time there's a movement, I'm sure you guys all have tax advisors by now, but think about, the tax advisors can help you, but it also helps when you know what's going on. So if you know where the money is moving, or money, so to speak, crypto, fiat, it makes it easier for you to determine where your tax impacts might be. Because every time there's a new event, a changing of a cryptocurrency, an earning of a cryptocurrency, there's a tax event there, very likely. So if you know what's happening and create kind of a document of this flow of your thoughts, of your structuring, it makes it a lot easier. You have a little bit of a template. And you can do this and take this to your advisors, and then all of a sudden you have this powerful tool. Even if they don't know crypto, they can now help you because you've just laid it out. And that's one of the things that I also help a lot of my NFT projects do, because as soon as you understand where everything is, you can start to structure things in a way more beneficial way.
Out of those people that just put your hand up because you're involved in NFT projects, can I have a show of hands for those who feel comfortable they know everything about taxes related to what they're doing?
One hand, just for the cameras. There's only one hand up. One other thing I'll say actually on that is, if you're not thinking about it already, every time, again, something kind of happens, essentially you're switching from one cryptocurrency to another, you're paying someone, essentially anything you do with the crypto other than hold, which also may be subject to tax consequences, but just depends. Think about, also in this practice that you hold, how you're gonna make sure your tax liabilities are covered. Like, for example, we've seen the market go up and down now, and you may be holding, but unfortunately, when does your tax obligation start? It might be when the market was high. So you may not have the funds to cover that tax liability 6 months, a year, depending on when you're paying down the road. So a good practice that you can keep, and I'm not saying this is right for everyone, is you could look at that tax event and convert it to a stable coin or fiat at the time, so you know at least your tax obligation is kind of sitting there and it's not going to fluctuate, and you're ready to pay it when it comes. And if things change, I mean, you have that money, you have that fiat stable coin, you can always switch back. But I really think it's really important, because if you're thinking about the livelihood of your NFT project or your business and the sustainability of it, we want it to survive. And the last thing we need is some sort of compliance or regulatory issue that brings you down. Not because your community's not strong, not because you're not passionate and don't have great ideas and are driving it forward, but because of something silly like that.
I think that regulatory compliance also defines how you should be setting these up. When you're starting out with it, what is the NFT you're creating actually providing? What is the underlying asset or utility or structure that's under there? And also, what market do you want to get that into? Which jurisdiction are you trying to access? Are you trying to access the UK market? Are you trying to access the American market? Because again, around that regulatory compliance, KYCs, knowing clients, making sure that you've got tracking of that, VAT implications, which I know Ben wants to talk about, and all of that will define how you set these up from the start. And then once you know what you're providing and what your jurisdiction is, knowing how that tax is treated for that person in that setup as well. So in the UK, it's capital gains tax at a personal level, and the HMRC document says they want to try and very few exceptions where CGT wouldn't apply. However, there's then this whole trading trap of commerciality, degree of complexibility, risk, which pushes a lot of people that are regularly in the crypto space into income tax. So you could provide something which, for the UK market, has the appearance of an asset class which is capital gains, but because of the regularity of what's going on with it and how it's operating, it's income tax and hitting people at personal levels at 40%, 45% tax rate.
So should we maybe talk a little bit about that too?
No.
Let's talk about it a little bit.
Ben is like getting ready. He's squirming in his seat. He's like, let me at him. Okay.
We've only got 9 minutes left. It's not long enough. No. Don't get me wrong, as an accountant, I'm used to being the bearer of bad news, so I'm sorry if I ruin anyone's day by saying this, but I'm going to say it anyway, and feel free to throw things at me if you feel that way inclined. A lot of the conversations we're having at the moment, again with projects, are people who haven't considered the VAT aspects of what they're selling.
Which is also sales tax.
Yeah.
For anyone who needs
Yeah.
translation.
Now, there's good reasons for that, actually. You know, how do we find most things out? We go onto Google, we Google it. Okay, there's not actually that much there at the moment in relation to what the position is in the UK. We've got sort of certain examples and guidance from what's happening elsewhere around the world. But what we need to break it down to is actually, you know, what we would say from a tax point of view is sort of first principles. You know, what is it we're actually selling? You know, we might say that we're an NFT project, but that the NFT that I'm selling, maybe it's linked to a real life car. Maybe that's what I'm selling. And from a VAT perspective, we already have rules that actually, you know, cater for cars. So the NFT certainly provides, you know, the evidence of ownership of that asset, that goods, maybe a service. But there are VAT implications to that. And this is where things start getting a bit complicated and a bit grey. Because what we need to understand really is, what is it that we are selling? There can be some very abstract things that we are selling that might neither be a good or a service. Some things, if we look at PFP projects, all right, I might not own the underlying IP to that image, but I can use that image. What we're seeing is actually in other places, there was a recent ruling in Spain in March where actually that fell within the electronic supplied services. It's the same in New Zealand. You know, what if I'm selling something which is actually a PFP, but it comes with community benefits later on? Maybe I get access to gigs, maybe I get merchandise, maybe I've got more of a mixed supply of actually what's going on in relation with this NFT. Now, all of these things do have VAT implications. And one of the difficulties around that is VAT typically relies on knowing where your customer is based. Now, the difficulty here, as I'm sure all of you are aware, is that with blockchain, you know, how often do we know who or where it is that we're dealing with?
Wait, so should we dox all of our customers?
Everyone, just do it.
Just
Yeah,
like,
absolutely.
I'm so sorry, but
And that provides some inherent difficulties because certainly as far as electronic supplied services goes, if I'm selling to a customer, i.e. not a business, that place of supply is deemed to be where they belong. Now, if I don't know where my customer base is, how can I get the VAT treatment right? What if I'm selling into the US and actually sales tax applies? What if I'm selling somewhere in the EU and I go over a threshold and I'm actually obliged to register over there or use our non-union one-stop shop? You know, there's lots of intricacies here. Now, if you go online and have a look at electronically supplied services, they mention things like, you know, IP addresses could be a way of actually determining where people could be from, but let's face it, again, in this world of anonymity, you know, it's hardly difficult for me to put on a VPN and pretend I'm in Portugal. So these are things that, you know, we are certainly engaging with clients to talk about because it's often overlooked. And, you know, if you're selling to anyone in the UK and you're UK based and that's 20%, again, you know, we've talked about things taking hits out of your margins. So we've got income tax, corporation tax. Now I'm coming along as well and saying, sorry guys, you've got that to think about as well, because potentially you do. So my advice around that would be to really, you know, engage with your advisors, talk about this with them, get the advice, get the evidence, find a supportable position in terms of what you're doing in order to get that right.
amazing. So should we have 5 minutes left. Should we do a question or should we do key takeaways? What do you guys
Questions
think?
are a risk, but we can see if there's
Let's
any.
do it. Let's do questions. Can we
Let's do
pass on
questions.
questions we don't want to
All
answer?
right, let's be quick because we got 5 minutes. They're going to kick us off real quick. So does anyone have a question that they want to ask? Okay, yeah, go ahead.
Do you have any websites or applications or firms that can give legal advice online that would, like, for example, aid to have a better overview on a project? Because having the reflection is good, but where do we start?
That's a great question.
Yeah, do you mean as in sort of just having finding people, having
Yeah.
a chat with them and everything else? Yeah, absolutely.
Yeah.
I mean, if you want some contacts in the legal space or you know, financial advisory space, then we can have a chat later. But yeah, there's, certainly people we can
And
put you
reach
in touch
out.
with.
I mean, I think I'm on Twitter. Twitter. Yeah, we're all on Twitter. Just DM us, you know, if you need some contacts. And also, I have sessions, and I'm sure Ben and Steve do too, where if you're thinking about something, I'm sure, like, I'm happy to do a free consult. I'm sure they would be too, just to preliminary get you started in the right direction. And then when things start going, let's have another conversation about it.
Because the regulations are there. So you still hear in the crypto space, oh, when regulation hits or when this comes in, and that it is there. There's very clear financial guidance. There's very clear legal guidance. And so all of the big firms, all of the people that are in that space do have very clear advice that they can provide and give on that. It's always interpretive because the crypto space moves so quick. And so it's always, and there will be an element of this is the best advice that can be given based on the information that's available. Yeah. But all of the big people are in that market at the moment.
That's a great point. Yeah, go ahead.
Yes.
So I know you work very closely with HMRC. Can you give us anything that's coming down the pipe, some future developments or anything like this? So a little bit of horizon scanning or like anything that's coming down the line?
No.
Okay, thank you. That was good.
Amazing.
Appreciate you. Thank you.
2 more hands went up immediately when you said no, Ben. Oh, okay.
Sorry, no, I didn't mean to. No,
Oh, that's a real no.
No, I mean, so yeah, myself and other advisors are part of working groups with HMRC now in terms of the NFT landscape. Things have certainly been quite delayed. We recently, we were one of the second country in the world to get DeFi guidance out early this year. Then back in April, the government went, hey, let's make the UK a great place for crypto, starting with a review of the DeFi. And my interpretation is, or understanding is that, there's been an open consultation over the last, it was over summer, basically, around DeFi rules. That's where the focus has been recently. So there's not been much forthcoming around sort of, any further guidance.
I thought you were going to say there's no NFT framework then. But you're not going to.
No, just guidance around NFTs. Is that a better answer than no? Well, thank you. That's okay.
Go.
Mine was a bit more general, I guess. Like, what do you guys think is like?
Oh, microphone.
Yeah, sorry, mine was a bit more general. It's kind of, what do you guys think is the kind of rough timelines before governments and tax authorities start to give practical support and tools for people to kind of do this kind of exercise with tax?
HMRC used to give like clearance and stuff like that, but it's not something which happens nowadays. So, as I said a minute ago, there is clear framework, guidance, and setups that. The issue tends to be that people don't understand what they're providing themselves. Oh, it's too complicated, so it doesn't fit in with any of these particular molds. But actually, once you strip it down and look at and take off the moon suit that is the NFT or the wrapper that you've got around it, there is a clear underlying asset or security or debt instrument under there. And then it just falls back into the normal regulations. So the HMRC and the legal frameworks and that, they have the ability to already answer those questions. It's just trying to unstrip what is the crypto buffer that sits around it.
Yeah, and I guess to add to that from the Canadian-US perspective, I think like as people start to do this more and as companies start to do this more, there's more things that the regulators and tax authorities will uncover, which will give them something to pursue, which will give us more guidance, unfortunately. So.
And I would say, actually, we do have quite a good manual in the UK. We've got the crypto asset manual, and it will just be added to and embellished over time as further guidance comes out. But it's a really good starting place to understand a lot of this. 30 seconds left.
Do we have maybe one question?
Mine's not actually a question, it's a bit of shameless self-promotion. We're also Web3 tax experts, and we know Ben very well and work on the working groups with him. We recently hired HMRC's head of crypto assets, so the guy who wrote the policy, Dion Seymour, he's over there. So if you have any tax questions in relation to NFTs or DeFi, obviously chat to these guys, but we are here, my whole team, and Dion, so come and ask us questions.
Amazing. Okay, 8 seconds. So I will say we will be in the back if you want to come talk to us about anything. And thank you so much for coming. And
Thank you.
Yeah, thank you for spending your morning here. Thank you.
It's a pleasure.